Hello everyone. Today's video we are going to look for fundamental analysis for stock selection. Okay, this is very important analysis. Okay, if you're knowing for this analysis that is sufficient for investing in a stock market, you can gain for profit. You can make for returns. Okay, so with the help of this fundamental analysis, how we can select for the stock, that is what we are going to look in this video. This part 1 will be a theoretical part. I will give you, it is not a board video, okay. I will give you what is a purpose we are using it, okay. And what is the outcome we will get once you are checking for these analysis. The part 2 you can get it for the website. Whatever we are looking this fundamental analysis in the part 1, with the help of website we can look over there how we can choose for the stock. If you know this theoretical, then automatically the practical for the part 2 which I am telling, easily you can understand. Okay, let's see. This is what the agenda for this presentation. We are going to look for what is fundamental analysis and what are the types available, okay. And what are the major type which we are using for the stock market right now, okay, for selecting the stock, and how we can analyze, as well as what is the purpose we are doing for this analysis. That is what we are looking. What is fundamental analysis? A fundamental analysis to evaluating the intrinsic value of a stock, okay. The intrinsic value of a stock, in a sense, with the help of these factors, you can estimate what will be the price of the particular company stock. You're going to determine, okay, you're going to predict, you're going to forecast, okay, focus the value of the stock. That's called intrinsic value. Intrinsic value, in a sense, you are estimating the value of the stock with the help of these factors. What are the factors? In a sense, company's financial health and management team, industry condition, overall economic outlook. All those things is very helpful in order to identify the stock as good or bad, okay, whether we can invest or not. With the help of these factors only, you're going to take a decision of it. Let's see the company's financial health. What are the things you need to analyze, okay? Many factors is available. Many analysis will be available to assessing for the company is financially health or not. But from here, I have given for these 4 major analysis. The first one will be balance sheet. Analyze the balance sheet. If your accounting background or finance background, you could know these terms: balance sheet, income statement, cash flow, and ratio analysis. Okay, other people did not know. So I will tell you in one sentence what is what and what is the purpose we are going to analyze this one. For the balance sheet, the company's performance, financial performance you are going to analyze. The balance sheet, in a sense, you need to identify the company's financial performance with the help of how much of asset they are holding, how much of liability they are holding. That is what you are going to analyze for the balance sheet. And the second one will be income statement. From the word itself, it's available in order to identify for the expenses as well as for the revenue. The company is running for the profitable business or it makes for loss. While we are comparing for the last of 5 years, you are checking the company made for the profit or no, with the help of this analysis. And the third one, cash flow statement. Cash flow, in a sense, in the word itself, it's available, the flow of money. So you're going to identify cash inflow as well as outflow from this analysis. You may ask why it's required for cash flow analysis. That time only you could know how much of cash is coming in, how much of cash is going out in terms of cash or loan or else credit, okay. In what way the money is coming in what way they are spending that money for expenses more or for income more, or they are investing for the new project, what is what. You can understand very clearly with the help of cash flow statement, okay. So whatever these 3 is available, balance sheet, income statement and cash flow statement, with the help of only one tool, you can assess for the company it's going on better position or no. With the help of ratio analysis, you can assess. What is ratio analysis? In a sense, this will be the analysis tool for the company. Okay, rest all will be detailed, will be available. But for the ratio analysis, we are using for the formula. A good example I will tell you for statistics, why we are using for correlation, regression, these kind of things. Once we are getting for the result, we can make for a decision, right? There should be a relationship available between two product or not. As the same way, we are using for ratio analysis. With the help of this result, we can take a decision whether we need to invest for a particular stock or no. Okay, so very, very important tool for ratio analysis. This is what ratio. Ratio is for analyzing the company. That's it. Different part of ratio is available that we can look for the part 2 in a practical way. Which ratio is important, which ratio we need to look for investing in a stock. Okay. These 4 major parts for analyzing the company's financial health. Next, let's see how we can analyze for the management team. That's very important part. Okay. Some people, they will not analyze for the financial part, that balance sheet, income and all. Now, older people, they will look for the management, they will assess it. Yeah, we can invest for a stock. In a good example, I can say for Tata, okay, for 60s and 50s and all, if you're looking, they already invested for Tata Group. They not even look for balance sheet, nothing else. Because of only person for Tata, Redden Tata, because of him, most of the people invested. As the same way, I'm asking one query to you, those who are watching this video. You can comment below any one person in UAE. Because of that person, I never look for any financial aspect. I can invest for the UAE stock market. Can you comment below the person name as well as for the company? Let me know. Okay, that's a good example. If you're looking for the management, you can take for a decision whether we can invest a stock or no. Even though from here, some of the factors available for the management. The management is a good management or bad management. How will you know? As you are an investor, you are the outside party, you not even worked in a company. How you are determining in a sense? With the help of these factors, the first factor will be length of tenure of CEO. Some companies, they will change the CEO every 2 years and 3 years. Some companies, they will change it for every 1 year and all, right? You need to look for the tenure, how many years they are working in a company, how much of years of experience they hold, okay? Based on that, you can choose it. If the person working for more than 5 years and 10 years, in a sense, surely they will run a good company, right? Most of the things, if you're looking for the company's website, you can look for CEO's tenure, especially for 4 cadre. CEO, CFO, COO, as well as for some executives, okay? And next, you're going to look for strategy as well as for goals. If the company is having for vision and mission, okay, a proper vision and mission in a sense, the company is good. They have a future. By that way, you can determine, okay? And for the third one will be insider buying and stock buybacks. What is insider buying? Insider buying in a sense, the company, the board of director or employee or executives, okay, they can buy for their stocks, okay? That's called insider buying. And what is stock buyback in a sense? And you can ask a query, insider buying, it's a good or bad? Insider buying is a good, okay? If the inside employee is buying a share in a sense, automatically the share value will be goes up. If the insider employee is buying in a sense, automatically share value will be goes up. That's the reason they are buying more. And for the second term will be stock buybacks. Stock buybacks in a sense, the CEO will buy their own stock. Say for example, they issued for 50,000 equity in a public, okay? They are purchasing for 10,000 and remaining the outstanding shares for the public will be 40,000 shares, right? So those who are holding for those 40,000 shares, the shareholder value will increase. Why? Because the number of outstanding shares will be decreased. So automatically the share value of particular company will increase. So the shareholder value will increase as well as share price also will be increased if they are doing for buyback. So insider buying and stock buybacks both will be the good sign in terms of shareholders. Okay. And good example, I will show you over here whatever insider buying happened for DFM. You can look over here in this. For DFM, you can open. Okay. Then you can click it over here for Market Watch. Once you're clicking this one, it will open this particular window. Okay. And from here at the top, you can look, it's available for insider trades. Okay. Once you're clicking this one, you can look over here. It's loading. So whatever insider buy happened for a particular day, it will show over here. So whatever happened for buy, insider buy happened, in a sense, it's a good sign for the employee. Whatever sell happened, in a sense, it goes down. That is a sign. Okay. So UPP, you can look here. It's sell 53,639. Everything happened for sell. And from here, you can look for Al-Ansari. It's available for buy. Okay, it means what? Al-Ansari will be goes up. Okay, see here, many buys happen for Al-Ansari, and yesterday also. This is the report for which I have downloaded today. Okay, today, in a sense, the date will be, that's for 16th, and yesterday also happened, insider buy happened for DFM, okay, more for Al-Ansari, and Sally happened for UPP. So this is a way you can decide whether stock will goes up or down. Okay. And for the compensation is a good sign. Everybody knows the employee will get the compensation by way of bonus. Okay. In terms of cash you will get. And some companies, they will give for the stocks for their employee, or else for managers and executives. A portion of stocks they will issue to the inside employees. Okay. That is also good. An example, if you're looking in a sense, Emirates. Okay, and this year they are getting for bonus for 3 or 4 weeks, something like that. They announced for the news, right? So that much of profit happened. It means what? So respective company share price will be higher. They not even listed. I'm telling, suppose if the listed company announced these kind of compensation to their employee, in a sense, it's a good sign for the company. The share price will goes up. So this is a way you can assess for the management team. And for the next one, industry condition, that's very important. Which industry you're going to invest. From here, it's available for many industries, right? Energy industry and real estate, banking industries, consumer service industries. Many industries is available. Which industry you're going to invest. If you assess for the industry, then you have to do for these three analysis. These three major analysis you need to do it. The first analysis will be competitive force model. Okay. It has given by Porter. What is competitive force model, in a sense? You can identify for the competitors. Okay. If you're choosing for the banking industry, many banks is available. Why you need to choose for specific bank, right? Another bank is also available. Why are you going to choose? That's a competitive force. The number of account holder will be more. They are having different policies will be there. They are giving for more loans. Many facilities is available. They don't have any debt. Alright, so you need to compare for the competitive force models with the help of these things. Okay, in terms of products, if you're looking in a sense, bargaining power of buyers, and what is the bargaining power of sellers, any thread is available for the particular business, as well as any, suppose if you're doing for any product, in a sense, whether you are giving for any supplements, any rewards to the particular customer, all those things you're going to watch. Okay, the company is booming for the particular industry, then you have to go and invest for the respective company. That is what the competitive force model says. From this model, easily you can identify the threats, okay, in an advanced way, whether you are doing for this analysis. And the next one will be pest analysis. Pest analysis, we are analyzing for the political, economy, technological, and socio-demographic. And political, in a good example, I will say for democratic country for India, right? Right now it's going on for election. So if you're looking for the market, it's normally down, right? Sometimes it's going up, and sometimes it will be very down. So you need to focus for the political as well as economy. If you're considering, in a sense, what is a policy they announced? Interest rate, monetary policy, GDP, inflation, right? All those things you need to compare. When the announcement, it will come, in a sense, directly it will affect for the particular company as well as for particular industry. When they are announcing for a budget, whether you're looking for, when they are announcing for the budget, that time if you're looking, the share price will goes up, and some cases it will be goes down. That also you need to watch. And technology. So based on the technology advancement, the respective industry will booming or not. Respective industry will adopt that respective technology or not. All those things you need to analyze it. And socio-demographic in a sense is related to age, okay, these kind of things. In a good example for IT sector, they will say for after 45 years or after 49 years, most of the people will be terminated, right? They are recruiting for youngsters, not for rather old age people. It's a threat for IT people when we can work, when they will remove from the job, right? So it's related to knowledge as well as for the demographic conditions adopt for this pest analysis. So for the pest analysis, what is pest analysis in a sense? It will analyze for the external environment. Okay, and SWOT analysis we will do for internal analysis. If the company, if they are doing internally with the employees as well as production and everything else, they're analyzing internally in a sense SWOT analysis. For pest analysis, they will analyze for the external. So internal analysis also required for particular industry as well as external analysis also required for the particular company as well as for industry in order to grow in a market. And the final one I told you for economic outlooks. Economic outlook, same thing. What is a policy they are making? That policy will affect for respective industry or not. If you're watching for the news, you can understand those things. Just you can spend for every day 5 to 10 minutes. Just you can watch for a particular time. What is a market? Any news will be arrived. Many news channels will be there, right? Just you can go through it related to business. You can gather for the knowledge. So now you can understand what's the difference between pest and SWOT. Pest will be external analysis and SWOT will be internal analysis. As well as for the economic analysis also. I think this theoretical part will be helpful for you. Okay. This is a base whether you are investing in a stock market. Okay. The next part we will look what is a website is available. These all analysis will be covered. Okay. What are the major part of analysis which we are going to look while we are selecting for the stock. Okay. I think this video will be helpful for you. If it is helpful, you can subscribe this channel and keep on watch and share to your friends. Suppose if they are looking for these kind of topics. Okay. As well as you need to know about the book value, what is market value, these kind of intrinsic value, face value, these kind of things. Okay. That also will come for another video. Okay. Thank you friends. Thank you for watching this. Bye.